Once again, a very good afternoon, everyone. Thank you for joining in for today's session. We have a nice topic. It's a CPD topic. It's a 1 hour of professionalism CPD today. And the topic for today's session is, as you all see on my screen, trust and general reconciliation demystified. So we did have a very similar topic about a couple of weeks back on bookkeeping compliances laid out by Law Society. There's going to be a little bit of, similarity. I won't call it as overlapping, but the first few slides are going to be very similar. But as we progress, there's going to be more new details. So if you have attended a couple of weeks back the webinar with us, CPD webinar, do not get confused or drop the call. It is definitely going to be a useful session and, of course, a CPD session too. And for the ones who are attending a session for the first time, you could use the chat window to access the attendance link and also check out the CPD topic to register at your respective Law Society portal to avail the credits. I'm just repeating once again, we do not provide any substantiative CPD hours. We provide only professionalism CPD hours, and this is entitled for 1 hour of professionalism CPD. Quickly, as we're already about 8 minutes delayed, but we are going to probably close the session about 3:08 as well, or 3:05. This is the agenda for today's session, and we're going to see basically what is reconciliation and how do you reconcile your books. This is going to be for both trust and general. When I mean general, it also includes credit card. Okay, so we're going to see the reconciliation process. We're going to see how you could be compliant with Law Society, always be audit ready, any month, any given period of time. And we're going to see a little checklist on what you could do to be prepared. And what are the things you could do to keep yourself compliant with Law Society at the same time. It starts off with the reconciliation, yes, of course. And what are the other processes? And yes, I would definitely do a live demo on that part using uLaw in the end. So quickly jumping into today's agenda and the topics. Accounting is a key for keeping your banks reconciled and up to date. Now, many of us have the panic mode on when it's that time of the month to reconcile your banks. As per Law Society, the trust needs to be reconciled for a month end before the following month of 25th of the following month. Now, that being said, general does not, of course, carry any of those deadline dates. However, if you're not operating a trust and you have only general, there are higher chances that Law Society would expect you to keep your general reconciled too. So try not to differentiate the weightage between keeping your trust and general reconciled. I believe they're both the same as long as you could record the entries and reconcile them from time to time. So now what we're going to talk today is about the basis of reconciliation. So it all starts with data entry, and when you're doing a data entry, you have several methods that you can follow. You could be doing it manually, you could be doing it using a simple spreadsheet, you could be using a simple accounting software or a legal accounting software. There could be any one of these that you're using, but making sure that the data is entered into your books and as per the bank account, keeping in mind that, the date, the amount, where the money goes, whether it's a debit or a credit, whether it's a deposit or a withdrawal. Now, all of these needs to be addressed at the time of you trying to create a simple data entry either into the respective books, either of the methods that you're using. Now that plays a vital role because you're doing the journals, and then it automatically transcripts into ledgers, and then that moves on to various documents like fee book, invoices, and you also have other law society documents, and then finally the reconciliation stuff too. Now, what you're entering into the trust and general respectively as deposits or withdrawal is what is going to be on your books. But sometimes there could be a little variance between what you've entered into your respective books and what has happened in your bank. There could be an outstanding deposit. There could be an outstanding withdrawal. You need to reduce them. You need to add them respectively. There could be some bank errors. You might need to address them too. So based on all of this, the accounting procedure needs to be recorded, needs to be consisting of all of these items such as the date, respective amount, into the respective client's ledger. So when a client pays you money, whether it's a retainer or client payment, you record it into the respective bank accounts, and you should be able to add in all the information respectively on that period or that date, specific date. So recording of bank statements and balances, and recording of any outstanding checks, outstanding deposits, bank errors, if any, very important to make a note. So a lot of us don't realize there's a bank error in your trust transaction or trust bank account, and you end up trying to reconcile, and you see there's a little bit of difference in the reconciled balance and the bank balance. So now that is mostly either outstanding checks, outstanding deposits that you have forgotten to clear or forgotten to make a note of, or there could be some bank errors. So please keep in mind these three things while you're doing trust. Of course, you don't have a bank error in case of general. You would just address it as if it's either an expense or an income. Over here, now, upon comparing your trust and the trust and the respective bank statement with your books, you would be able to complete the reconciliation. There's simple 4 steps. You start off with your balance as per the bank statement. You then have client trust listing, which shows you exactly what are the outstanding amounts in the respective client's account. You would also have to clear off the outstanding checks and outstanding deposits. And finally, you have the trust comparison with the bank statement. So keeping in mind that you're trying to compare your books with the bank statement, may not be a classic example here is that, let's say on 30th of August or 31st of August, you're trying to transfer some amount from trust to the general, and you realize that the check did not, or the transfer did not clear until 1st of September in the bank. So when you're trying to reconcile 31st of August, you need to deliberately uncheck or unclear that deposit and withdrawal so that it'll match with your bank records. So keeping in mind the date of reconciliation, the balance as per the bank statement, and knowing clearly what are the deposits and withdrawals that has only been cleared in the bank to be cleared in uLaw or your respective method of reconciliation that you're using. And when the above 3 completes in uLaw, it automatically shows up the reconciliation tab. Now, since I'm representing uLaw, I'll have to pull in that. But if you're not a uLaw user, please make sure at least the first 3 steps are followed, and then you will have to reconcile your books. Now, This is the same process for general, and like I said, only no bank error, but the process is the same for both general and credit. The trust account. So keeping in mind, the additional step involved in trust is only the bank error. As you all can see, what it takes to reconcile a general account. The step one is to know your closing balance as on the date. And step two is to clear the transactions that you only see in the bank. And step three, there is no bank error concept here, but you will automatically see the bank statements showing up all the outstanding deposits and withdrawals, which means you will notice that it has not been cleared in the bank. You will leave that here and basically unclear the transactions, and it will automatically reconcile. So it's an accounting procedure that demonstrates all the records are correct as per your general account, bank account. And this activity consists of three parts. You're recording the bank statements and the balances. You're clearing off all the transactions, but leaving out the outstanding checks and deposits. And end of the day, you're able to match with the bank and ledger comparison over here. And as you progress, you will also see that end of the day, when you have done the data entry, when you have done the reconciliations, you are already audit ready if you are downloading these Law Society compliance documents from accounts. Which means that if you just produce these documents as reports, you're absolutely audit ready. If you have completed your trust and general reconciliation, all the audit requirements just becomes these reports. You just need to download them and you're ready to go. I mean, honestly, this shouldn't take more than a few minutes unless you are going through the process of making any changes to the transactions you've entered. Everything should be straightforward and simple. Talking about the checklist here. Now, what takes to keep yourself compliant with Law Society? Not only compliant, but at the same time, what does it take to produce these reports? Produce these reports in the terms of reconciliations or Form 9As or any other compliance documents. Definitely making sure you have a proper fee structure. You're able to notify on your retainer letter, handling all of these contingency fee and block fee and other disbursements. So you need to identify your style of billing. You need to identify whether you're getting a retainer before you do anything. Having the right procedure to issue a receipt upon collecting the retainer, capturing the legal fee respectively, either as a block fee or a billable time, either as legal fee alone or legal fee and disbursements. Capturing and recovery with appropriate taxes. If the client is in the respective province, as well as whether you have crossed your HST limit or not. Based on it, whether you're charging taxes or not charging taxes, totally depends on what your current status is, and capturing cost recovery and appropriate taxes, capturing legal fee and disbursements respectively, having the right procedure to issue a receipt upon acceptance of a retainer amount, and to ensure that you hold the retainer in trust unless and until you have completed the work, you raise an invoice, and you transfer the money from trust to the general. So once you're done handling the preliminary part of retainer and fee structure, you move on to invoicing the client. Once you invoice in a timely manner, recording taxes on invoices, and addressing client concerns, complaints regarding fee. All of these are internal procedures. You have to focus on them. At the same time, you're also able to comply with Law Society guidelines as to you having to issue receipts or you having to raise an invoice before you transfer the money from trust to the general. These are minute details that you have to pay attention to. A lot of them times transfer the money from trust to the general, then raise an invoice. That's absolutely wrong. That's not, it clearly shows you're out of compliance. So the procedure to transfer money from trust is that the money lying in trust is not yours. First of all, it's your client's. Now, if you have to transfer that from trust and make it yours, the only way you could do that is by raising the invoice for the work done, and that'll allow you to transfer the money from trust to the general. Same way, when you have invoice balance, it means that you've raised an invoice for $1,000. You had only $500 in trust, or $500 is showing an invoice balance. You need to make sure that your invoice is showing the balance. You've captured the balance into trust and general respectively, and that you're getting paid from trust, as well as you get paid from into the general for the remaining amount. Paying disbursements out of trust and paying disbursements out of general are not the same. So when you pay the disbursements out of trust, you are going to directly pay them out of trust. Just make sure you're not over withdrawing anything from trust. These are some points for you to remember. Getting your disbursements done from trust is not wrong. It is absolutely fine. Two things to remember here is that you are not over withdrawing from trust. Point number one. Point number two, you are basically not marking up any of the expense. You are just transferring for the portion of which you are going to disperse from trust to the general. So all of these are to be kept in mind to keep yourself compliant at that respective stages and getting paid from trust or general respectively, ensuring that you are receiving amounts in general less or equal to invoice outstanding balance. So if you are getting paid into general, basically you are raising an invoice. Like I already mentioned, you have some money remaining in trust. Sorry, you have some money in trust, which you are transferring from trust to the general, but the invoice is more than what was available in the trust. So you are asking your client to pay the remaining or the invoice outstanding balance into your general account, because you're no more obligated to bring that into your trust account. Trust account is mostly only retainer, but general is for, after completing your work. After you raise an invoice, anything pending can definitely go into general directly. Getting paid into general for disbursements is not very simple. You pay the disbursements from general and you recover it from client, either from trust to the general or directly by getting the payment into the general. End of the day, you make sure your invoice is organized. You know what you're doing in terms of collecting the money. You are not confused between getting the money in the trust or into the general. You're not over withdrawing, or at the same time, you're not over collecting from the client. So rather, charging 500 and getting 1,000 into the general by mistake would put you again out of compliances. So please make sure that you're very clear of the invoiced amount and you're communicating it to your client clearly. So you have to make sure your invoice is not complicated and you're able to communicate to the client as to what is your balance outstanding on that invoice. Now, that being said, upon designing the fee structure, retainer, let's say invoice is done, balance is transferred. Now, how do you handle the required procedures and documents for trust account and general account? For trust account, you have to make sure you maintain the client ledgers, because end of the day, you need to produce it. Client trust ledger is one of the most important law society document, and you're maintaining client's trust ledger, you're maintaining the receipts, disbursements, Form 9As for transfers from trust to the general electronically, and last but not the least, maintaining trust reconciliations, which will allow you to complete the transactions and complete the reconciliation on time. Also, when you come to general account, maintaining general ledger, maintaining your receipts, disbursements, fee book, expense book, there also, again, monthly reconciliations over here. Now, over here, there is no trouble of downloading an additional document, Form 9A or something. This Form 9A is only when it comes to trust ledgers, because you're removing the money from trust to the general. Taxes, again, you have to make sure you maintain the records for your respective provincial taxes. And also if you have corporate taxes for the taxes paid out. And over here, at the end, you're able to produce all of these documents in no time. Of course, if you're able to do that, you're going to have a seamless accounting that you can bring into your practice. You have the double entry system. This means that during data entry time, records are basically collected at both ends, like there's a debit to the respective credit, and sometimes there could be a lot of mistakes that could occur if you're doing them manually. So that's the reason we recommend a software that allows you to just enter the data once, and it will be captured at different areas, which will where you can avoid making errors. And with seamless accounting, you also have, if you have any, practitioners are used to matter management. Translating matter management workflows to seamless accounting is the key to saving time. What makes reconciliation simple is that you are recording the events then and there. Basically, you don't record the event few days after it happens, so that there could be errors in dates, errors in amount, errors could be made in description, or you could even enter a withdrawal as a deposit. You never know what mistakes could occur. So that's why we always recommend doing a real-time data entry, and it's super simple to keep you away from errors. Now, automatically maintaining ledgers and journals of matter workflow keeps accounting data and the bank records in alignment. Now, not only does it allow you to record and maintain the journals and the ledgers, it also transfers these data into meaningful documents for your clients, for your business, for your law society purposes. So these records are aligned in such a way that anyone could read it and understand it. At the same time, adhere to the compliance standards laid out by your respective law society. I'm sure many of you here are using uLaw. If the ones who are not, the ones attending this call or this webinar, and you're not a uLaw user, I highly encourage you to sign up for a 30-day free trial. And there's so many things that are not just seen in this webinar, but they are really very helpful features that are available in uLaw. We do have several webinars every Friday, 2 to 3 p.m. that you could take a look at it and understand what are the developments, what are the features we really have, and make your learning useful and go from there. Over here, you also have some useful links, which I would be sharing at the end to keep your learning going with in terms of bookkeeping compliances. Just to take a quick look at, with all these trust reconciliations and general reconciliation, what takes it to be, reconciled, what takes it to be compliant with the Law Society? Now, reconciliation is designed to catch two issues. Now, number one, it catches all the transactions that you have in your accounting system that do not match your bank records. It also catches all bank transactions that you have forgotten to enter in the accounting system. Now, not necessarily always you're at fault. It could be your bank is at fault. It could be that you have not carried out the transaction properly. That could be a bank error, whatever it is. And there's also a possibility where you have missed to record it in the books. You have probably added it into the bank account, but you have missed to record it in the books that you are using to reconcile your accounts. If you reconcile month by month, it means you're up to date. You're always audit ready. You're ready to file taxes with CRA. You have made your analysis on the accounting system, and it's all accurate. You're able to generate all the reports for your accounting system. Can have impact to your business. You have a peace of mind. End of the day, you're able to understand what happens in there. You're on top of it. That's what I mean. Now, if you want to be audit ready, you need to be on top of it. You could be spot audited anytime. You could be called in to submit your documents anytime. So try to be audit ready by doing such things that we discussed now in the last 35 minutes. I'd like to take a quick pause to see if you all have any questions. And just to repeat, the topic for today's session is Trust and General Reconciliation Demystified. Attendance link saw posted on the chat window. This is for 1 hour of professionalism CPD credits. And any questions, are welcome on the chat window. As you all have seen how the Trust and General Reconciliation works, it's pretty straightforward, but at the same time, it could be confusing if you have not followed the steps that we discussed now. I mean, these are only some keys, some tips for you to process your reconciliations faster than you think. And they would allow you to keep yourself compliant, at the same time also allow you to be comparing your bank records with the books of whatever accounting method procedure that you've adapted to. And end of the day, you are clean and you're ready for the audit. So whatever steps that we discussed today, try to implement them at your end, right from the day one of, trying to put them into your trust account as a retainer, issuing the receipt, or generating a Form 9A for transferring the funds from trust to the general. Everything is clearly important. And over here, we were also talking about a little bit of benefits to use in accounting software. So making sure everything is simpler for you. A legal accounting software is not just for you to dock it and raise an invoice and send it to the client, but also maintain the legal data, that legal accounting data for each client of the money that they've paid and the money that was disbursed, the money that was rather invoiced and that was transferred from trust to the general. It's all about compliance, end of the day, accountability, ease of use, and last but not least, analytics too, because you will need to be more vigilant towards what you're trying to do for your next quarter or for the upcoming events, etc. Just want to take a quick pause once again here to share my screen to you all and show you all how our uLawPractice demo account works. And this is clearly to show you all a reconciliation sample end to end, right? From the time you add a client or right from the time you open a file, you do an invoicing, you get the money into your trust, you give a receipt, and you go on. It's going to be end-to-end accounting track here for the next 20 minutes. I request you all to put in your questions in the chat window, starting off with adding a new client. And I'm just going to save some time and skip the part of adding addresses and other information. Just quickly moving on to adding a matter title. Let's say this is a speeding ticket. It's potential offenses and court file number, matter description. It's just an additional information for you. If you're doing an hourly rate, enter the hourly rate. If you have an assistant, enter your assistant's rate. Default tax rate set to your province. Now mine is set to 13% for Ontario. Now it will be set to your province if you're outside of Ontario, to the respective provincial taxes. Over here, you do have an event title where you would be doing a legal fee, making sure that you enter the legal fee. Let's say I want to keep it as a flat rate. I am going to do a $500 retainer, $500 legal fee plus taxes. Let's say I'm entering saying the client okay. Want to use one of our AI tools to just make it as a summary. Make it as a description, slide, save it. Once you're done with that, you're going to be able to click on compliance. You want to do a quick retainer letter. You want to ask your client for a $500 retainer and let them know that you need an additional amount. So they pay you the additional amount using their credit card or email transfer. You come back into uLaw. You click on disbursements retainer in the respective account. New retainer, enter the $500. Let's say the email transferred you. The best part here, what we saw on the checklist, is to be compliant at every stage, not just for you to reconcile your books, but at every stage. Now, when you are asking them for a retainer, you need to provide them with a retainer letter. Now, when you have received the retainer, you have to provide them with a receipt. So I'm doing that by simply clicking on receipt, and you click on apply, and you click on download. As simple as that. Once you've issued the receipt to the client, you've confirmed that you have got the money into the trust account. You click on invoice, complete the invoice. Want a small one, whatever theme, you can skip preview if you're overly confident. If you're not sure, always preview it. Just to save time, I skip the preview. Now, once you have downloaded the invoice, you will be able to complete the trust transfer. Now, this is the second point that I was talking about, keeping compliant. Now, I could have easily transferred the $500 the day they paid me. Now, but one thing to remember here is I have not completed the work the day they paid me the retainer. Second thing is you have not raised an invoice either. So making sure that you have done both is important. And you can transfer the money from trust to the general by simply clicking on question mark. Of course, you're going to go do it in the bank first. Once you're done at the bank, then you can come back into uLaw and you can transfer the money from trust to the general by simply clicking on transfer. Okay. Now, please give me it. Question mark, transfer the amount. You're done with the bank, so great. You choose the method of payment that you did at the bank. Enter the reference number. Download a form maybe. This is the Form 90 that you generate upon completing your trust transfer electronically. Okay. And go back in there. Look at the matter. Now everything is done here. There's another point that we were discussing about the general reconciliation, where your client owes you some extra amount, and how do you bring that into your respective books to reconcile. And right here you would see question mark payments. It'll automatically show you that you only can collect $65. If you're using uLaw, we don't allow you to get additional amount, okay? So we tell you that, hey, you had raised invoice for $565, you had $500, now you can only get another $65 into your into your general account. And upon doing that, let's say just like that, you try to get 100. I'll not allow you. You'll have to override, which is being out of compliances. So please make sure that you keep in mind that you don't collect additional amount, which is either over withdrawal from trust or over collection into general. Both are basically out of compliance, or both are basically not in compliances for you. So right here you do that, and you can click on the method of payment, provide the amount, accounts received from receipt, and apply. you're also giving them another receipt over here upon completing the payment. So I will look at it over here. Now, in order to not be out of compliances, you need to make sure that you have you're done with providing receipt upon collecting payment into trust and general respectively. Now I'm done with all of this. The best part here is to quickly do a reconciliation. Now I would like to show you all the reconciliation process at my end. I'm right now in the trust account. I have received a 500 and I've withdrawn a 500 for today's date. I'll show you how that shows up here. The top two lines with today's date for the client that we added today is showing up nicely over here. Because I did the transaction today and I entered it today, I was able to identify it immediately to complete the reconciliation without any trouble. Okay, and let's click on reconciliation transaction. And over here, the preview shows the step 1 is date. Never enter a wrong date, like enter the bank date, enter the bank balance, step 2, first 2 lines. Then clear off the transactions as you see at the bottom, only that you see in the bank account. You also set the bank date and the reconciliation button pops up automatically. Of course, they have to be the same, the total reconciled account balance and an unexpended balance as per the ledger has to be the same. And you will see the reconciliation popping up automatically. Now, if you're someone who have not done reconciliation before, I highly recommend you to enter the bank balance as per your bank statement and the date as per your bank statement. After you log in online, check your balances, or if you have a physical copy, you could do that too. So please make sure that you are not trying to enter a balance that is nowhere close to what is in the bank statement. So making sure of the bank balance and the date and the amount of outstanding withdrawals and outstanding deposits. You take a look at the bank account and you take a look at it over here, you'll be able to see that very clearly. Now, I want to show you all the $500 that we added today at the bottom most that you can see. Okay. Sorry, just give me one moment. I'm going into the last page. Today is 29th of September. And you'd see the $500 right here. But the client paid you a $500 of reconciliation account. A lot of it. You clear them one by one. You enter the date. You enter the balance. And you just have to clear them one by one. Once you finish clearing all the transactions, the reconciliation button will pop up here. All that you're going to do is simply click on the reconciliation and you will see the reconciliation statement showing you all the outstanding balances. This is my playground account. Could take a little bit of time. While we're doing that, I'm going to just recap whatever we did today. Please keep in mind there could be an order to all of this to be absolutely done in no time. Once again, the reconciliation process is not at all elaborate if you pay attention to minute details as to handling your retainers, raising your invoices on time, providing a receipt upon completing the retainer process, invoicing, getting paid into trust or general respectively, and also handling the trust account and required procedures and documents. Making sure you have the general account, you're not either getting overpaid into the general or not overdrawing from your trust. Both are important. Okay, so that's how a reconciliation statement looks. Shows you all of the transactions, and then from here shows you all the outstanding transactions, withdrawals, and etc. Outstanding deposits are also seen here. These are outstanding deposits, withdrawals, and shows you also what is the trust listing for that period. This is what is the trust listing for that period. So this helps you to reconcile in no time if you have the checklist and you produce them from time to time. And you're also able to follow the accounting system procedure in place. You're able to record the data, demonstrate all of those details for simple reconciliation tasks. And, end of the day, these reconciliations helps you to be not just audit ready, but also catch all the issues that you're facing at your bank level, whether it is accounting system that does not match with your bank records or vice versa. You will be able to find that out in no time and fix that issue. So if you are reconciled month by month, I would just say try to keep a date. Let's say end of this 30th of September. You want to make sure your online bank statements are downloaded, and within the first 1 week to 10 days before October the 10th, you try to at least do a preview and finalize so that you can arrive at your errors, if anything, and rectify it immediately. If I were you, I would not wait for the month to end. I would even do a weekly or a bi-weekly reconciliations during the September month itself, so that your accounting system is up to date. You're ready to file your taxes anytime. You're most importantly audit ready at any time. You're able to rectify your issues or mistakes then and there, and you have your reports out of your accounting system, which can impact your business, and you basically can be at peace if you are able to manage all of this. Once again, I'd like to mention it to all of you that it is important to do the reconciliations every month. You don't please delay it, especially trust. But like I said, it's not compulsory for general, but there could be a couple of reasons. One, if you're being audited and you could be asked for general, it's not necessary always trust accounts are only being audited. Number two, if you're making any errors, you get to know them ahead of time for you to fix them, and that way you are compliant. At the same time, your accounts or books are very accurate. For the ones doing it manually, I know it could be a little difficult, but please try to use a legal accounting system so that you are not sitting and making manual ledgers and manual journals. End of the day, for you to be audit ready, it's not enough if just your accounts are reconciled. You're going to be asked for several ledgers, journals, Form 9As, fee books, expense book, whatnot. So try to be on top of it. Try to have a reconciliation process that would allow you to be on top of it. You just have to download the documents and go from there. So if your checklist is ready and you follow the process, once again, you have done everything to keep yourself audit proof. Your reconciliation and being ready for the audit is merely just a few minutes of work. Shouldn't take you for more than hours. So only if you pile it up, it's going to be a nightmare. But if you're doing it regularly, if you're doing it then and there, on the spot, things are going to be very, very simple, and it's going to seem more smooth for you to run your firm. Otherwise, accounting becomes a burden. Being out of compliance becomes an additional burden. So please make sure that you are not only trying to keep yourself compliant, but also end of the day, accurate with your numbers into your books, and also follow all of these guidelines. So for the ones joining us on the webinar today, for the references, I have added more of links. Request you all to make a note of it. Just taking a quick look at the chat window to see if I have any questions. Please let me know if you all have any questions, any specific questions in regards to trust reconciliation, general reconciliation, maybe bookkeeping compliances, any of these. Please do let me know and I could repeat the process. If not, I thank each and every one for attending today's session, and we would have some small announcements, and I request you to stay back after the meeting. I would love to answer any questions if you want me to go over any of these slides. If you want to talk about trust reconciliation, general reconciliation, you have any specific questions on how do you prepare reconciliation. These are simple 3 to 4 step process, starting with key thing with the date of reconciliation, amount, that is the balance as per the bank statement, clearing the withdrawals and deposits that has been cleared at the bank level, and complete everything upon reconciliations. All right, so if there are no questions, I'd like to end the webinar saying thank you to each and every one for joining us today. Please hang tight there while I stop the recording for others to benefit, to keep it short. And we'll have new set of webinars posted this week during the upcoming week. And please wait until the next webinar schedule is out. And 2 to 3 p.m. every Friday Eastern Standard Time, you would have us do a session. There'd be minimum of 2 to 3 CPDs a month and a couple of other topics that would interest you. You're welcome to send us questions on info@uLawPractice.com. And any questions, please do enter it on the chat window. We are here for another 7 to 8 minutes. Thank you so much and have a nice day.